Welcome to the Money Market. Your host, Paul LaJoy here, and every week I bring to you exciting people from the mortgage industry and also real estate industry. So today with me is Ryan. Ryan is with Unite Mortgage. He has exciting products to present to you. And if you're watching this, a real estate agent, we're here to boost your business, to grow your business, to take you to the zenith. Maybe you're already successful, but that who cares? You know what I mean? You want to succeed even more, right? So that's why you're listening. And that's why you're still in the industry. So Ryan is going to bring some products today that will take your business to the next level. How about that? Thank you for coming and watching the show. So
Brian, of course, thank you for inviting me, Paul.
Yeah, cool. Now tell me, so Unite Mortgage, right?
Yes, Unite Mortgage.
Okay, cool. And so how long have you guys been in business?
Yeah, so we are a DBA of HMAC. So we've been around for about 10 years now. So that's the name of our company, and that's what we do.
Okay, good. Okay, great. And where are you guys based?
So we are based in California. I'm specifically in Phoenix, Arizona, however. So we have a branch out here in Phoenix, and that's where I'm located at.
Oh, so you guys are based in California, Southern California, I'm supposing, right?
Yes, that is correct. Yes.
Okay. A lot of companies are based out there. That's awesome. Irvine,
California, correct.
There you go. It's a beautiful city.
That's where everyone's at.
If I didn't like here in the Bay Area, I'll move to Irvine. It's really beautiful, and they have other beaches right there, and Malibu is not,
Newport Beach, yeah.
And I can have my TV show. That's where it is, right? Everybody's Hollywood.
You can have it on the beach.
Okay. Awesome, man. I'm so excited to have you on the show today. So tell me about your company and what makes you guys stand out.
Yeah, sure. So once again, thank you for inviting me on here. Specifically, what we were focusing on is really just being an outstanding partner to, brokers like yourself, and closing their loans. Specifically, the nuts and bolts of what we're doing. We have a few unique things on the non-QM side of the house that I will go into. But also we're closing loans quickly. We're closing loans in 15 days and offering great pricing for brokers like yourself to offer to borrowers.
Closing loans in 15 days, man, that'll be exciting. 15 days. If the realtors listen to this, you got a transaction today and it's going to close in 15 days before Christmas. Man, how nice is that?
Yeah.
So what makes you guys close loans in 15 days? Why?
So specifically our turn times, we built a staff in place that, can handle the volume that comes in, right? So, you have lenders out there that are taking in volume that they just not staffed for, specifically in all categories and operations, whether it's disclosures, whether it's underwriting, closing. We have people in place that are reviewing anything that you're submitting and quickly getting back to you so that we can move files.
That's amazing. Okay, that's great. You mentioned one point. Basically, you're not taking a slew of applications, but you're not able to close them. You got to make sure that you cut the code according to your size. That's what I'm hearing, right?
Well, yeah. So a lot of time, some lenders out there, just taking, they've taken in so much volume that they're not staffed for, and their initial approval turn time is 15 days. And that's not uncommon in the marketplace to have something where you're waiting on an approval for 15, 16, 20 days possibly, right? It's a good problem to have for those lenders because that means they're generating a lot of business, but broker partners and realtors, it definitely adds another kink in the wheel to ultimately getting this to the funding table.
That's interesting. Okay, so let's talk about your products, right? So let's talk about your options, the options that you offer there, the solutions that you offer there to those who are watching right now, realtors.
So specifically, do I have availability to share my screen here?
Yeah, go ahead.
All right, perfect. Let me see here. Pop it up. All righty.
All right, you're sharing now.
Let's see. Do you see my screen?
Yeah, I see your screen.
Okay, perfect. Yeah, this is our homepage right here. So before I go into, just some of the unique things that we're doing, I also want to drop some knowledge just in what's going on in the marketplace. So this is something that was quoted by the MBA, and, specifically for your realtors out there, refi business is expected to decrease by 62% next year. Yeah, you heard that right.
Okay.
62%. This is what the NBA is quoting. It was something that they were quoting before COVID, so early 2020.
Yes.
But obviously, we all know what happened and rates dropped. So specifically out there in the marketplace, there's that purchase business is going to be where to lie, right? So some of
Yes.
those easy refis that were coming in may not be available anymore. So specifically, let's talk about the unique things that we're doing on the non-QM side of the house, right? So we do have really what we're going to lie is
Before
we
we do
have
that,
go ahead.
I have a comment on that last slide there. So the refi
Yeah.
business, okay, I think, okay, of course the rates are going up, inching up a little bit, but I think because
Mhm.
also you have to look at that the loan limits have gone up too. So if somebody did an FHA loan, right, and then the loan limit has gone up, guess what's going to happen right now? That loan is not going to be FHA. So there's still some possibility that to refinance those kind of loans. Wouldn't you agree? And then the
Of
balance.
course, yeah. Yeah, so this is not to say that refi business is going to go away. By all means, and what I think it is a great opportunity to reach out to those borrowers and possibly take cash out.
Exactly.
So it's not necessarily a negative thing, right? So
Yes.
just wanted to bring this to your attention, right? Because us, living in the real estate world and mortgage world, we have to adjust as the market adjusts, right?
Exactly.
So, purchase business is going to increase. And then also your cash out business is going to increase.
Exactly.
So, those borrowers that you refied, as value goes up, they need to take cash out. There's going to be a lot of opportunity for you to do that, right? So this is just something that I wanted to bring to your attention and bring to the market's attention, because this is what the NBA is quoting, and we need to adjust on the fly just as this comes into play.
Exactly. So this is an opportunity for real estate agents, right? So basically, as the values keep going up, right? And then the loan limit has gone up too. So their clients can take out money and go buy another property, a second property, out of state, stuff like that. So the opportunities are still there. As you know, our number one clients and number one listeners are real estate agents, right? And we help them grow their business phenomenally. So we give them these opportunities, tools, right? The mortgage tools, so that they can go now and talk to their clients. This is an opportunity for them to go and talk to a client that they haven't spoken to for some time, right? Instead of just doing one transaction, they move on to another. We give them tools so that they can talk to their clients on a regular basis. They can be well advisors to their clients, right? Using real estate.
Yes. So, excuse me, flashing this on the screen, I didn't mean for it to be a negative, right? Specifically for realtors out there, you can view this as there's going to be more purchase business out there, right? So, this is just what the MBA is predicting, and generally the MBA is pretty spot on with some of the things that they throw out there in the marketplace. In reason, nobody could expect what happened in 2020, but this is what we're looking at from a market perspective.
Awesome. Okay, good. Let's go on to the products.
Yeah. So specifically, the programs that we're offering on the non-QM side of the house, we offer a DSCR program, three different types, and then also bank statement program.
Yes.
So some of the unique things that we're doing from a DSCR perspective is one, pricing is going to be there. Pricing is always important, right, to your borrowers. That's ultimately we want to fund loans, right? But we want to provide them with the most up-to-date pricing and best pricing that we possibly can. But specifically for some borrowers, and what's unique about our programs is we're actually allowing a few things that most lenders in the marketplace are not. One, you could be a first-time home buyer. Two, you can use gift funds with our programs. And three, you can be a first-time investor. I know on paper that may sound like something simple, but this is something that nobody in the marketplace is doing whatsoever, right? So as far in terms of pricing being there and a few of the unique things that we are doing, going down to a 620 FICO, gift funds okay. This is a great program that your investor loans can go through If you're not familiar with what a DSCR program is, essentially what you do is you use the rental income that can be generated from the purchase property against the proposed payment that would be to the borrower. So if you could qualify that method, there's no income or employment that is generated through these loans.
Exactly. Okay, so let's talk about gift funds, right? For gift funds here, right? How much do they need to come up with, or is it 100% gift funds?
So gift funds can be used, 100% of those can be used towards the down payment and closing costs. There is a reserve requirement that will depend on this scenario itself and can range between 6 and 12 months on the subject property. Gift funds cannot be used for those reserves. So they would need to have their own funds in place. However, for down payment and closing costs, gift funds can be used.
So let's say, all right, somebody wants to become an investor, a real estate investor, and they got a deal in Florida, this great deal in Florida, and they want to buy this property, brand new construction in Cape Coral, for example, and they're going to get it for less than $300,000. So they can actually, and you require 20% down. That money can be given by their parent, right, or their friend, or whatever. I mean, can that money be given by a friend, or is it basically
no? So good question. Yes. So with the gift funds, it will follow straight Fannie Mae guidelines in terms of the relationship to the borrower. So it can't be my buddy off the street said he'd give me this money. So it can't be that. So there does have to be a relationship in place. But if that relationship is placed per Fannie Mae guidelines, gift funds can be allowed.
Okay, good. All right. Okay, so you still follow Fannie Mae guidelines for these DSCR programs, so non-QM loans.
Specifically for the gift funds, it follows Fannie Mae guidelines for gift funds.
Okay, so I see that you can go up to 80% loan to value and 75% cash out refi, and the FICO score can be as low as 620, right?
That is correct. Yep. So go down to as low as a 620. Another thing to keep note here is we do have a 40-year IO option, which is another unique thing. And then there is the prepayment penalty, which with these loans, prepayment penalties are common across the industry. They do come with it. You can have the option to buy it out for a pricing hit or go as high as a 5-year prepayment penalty.
Okay, cool. So the longer the prepayment term is, the lower the interest rate, correct?
That is correct. Yeah. So you buy out your prepayment penalty with no prepayment penalty, you're going to have a higher rate. 5-year prepayment penalty going to be a higher rate.
So let's talk about
lower rate.
Yeah. Let's talk about this one rate thing that you have. What do you mean by one rate?
Yeah. So this is one of our 3 programs, right? So what the DSCR one rate is, it's exactly what it sounds like. It's one rate, right? So 4.375, excuse me. And what it is you just need to meet the criteria, right? So you need a minimum FICO of 700. It's a 5-year prepayment penalty, and the max LTV would be 70% on this. So if you meet these criteria, there's no other hits. This would be exactly at par. And you could just qualify into that if you meet these requirements. Okay,
cool. So somebody wants to buy a property going to use for Airbnb, right? So in nice places, San Francisco, Oakland, and hey, they got gift funds up to 30% down from their parent, and they just need to have some reserves. And so this will qualify them, right? You see, there's 70% LTV for that purchase. Is that correct?
That is correct. Yep. So they would fall into that. The loan amounts for this program, important to know, is $300,000 to $1 million. Okay. So that is the loan amount requirements over that. If it does dip over $1 million, not the end of the world. We can go all the way to $3 million. It just wouldn't qualify for the one rate.
Okay. That's interesting. Okay, cool. That's great. So that
specifically, yes. So, DSCR programs, there's a lot of lenders who do these, but what I wanted to point out is just the unique things that make us different from the other lenders that move in the marketplace. And specifically as well, we move these files, right? We move these files. This kind of brings me to our 12-day purchase guarantee. perfect for maybe a loan that already has an appraisal done that you're just transferring. We will move these loans if we meet these criterias. Just in terms of deadlines, we can close loans pretty quickly.
Okay, so going back to DSCR, last thing is basically that these are for investment purposes only, right?
Yes. So DSCR is going to be investment properties only, right? Because if you have a primary, there's no rental income. Even if it's a 2-unit and you're getting rent from the second unit, it's viewed as a owner occupied, and this would not qualify within this program. However, right, that brings me to our bank statement program, right? So we do offer a one-rate bank statement program as well, and this would be for owner occupied only. So similar to the one-rate DSCR, except this one would be at 4.125%. The max LTV would be 80% on a purchase, and it would be 24-month bank statements with a 720 and up FICO. So if you meet those requirements, you could also qualify into the one-rate bank statement program.
But I see some lenders, they have 90% LTV. So yours is 80%?
So that was the one rate program. So the one that you're looking at right here, you see we can go down to, or we have a 10% down option. That goes to a 700 FICO, right? So if you have a 700 plus FICO and you wanted to qualify with 10% down, you can do that as well.
Okay, so I saw some places they were talking about forbearance, right? I was talking to a client yesterday, and she said that they had a forbearance, right, and because of COVID, and the lender had promised them that that whatever they were behind on, the arrearage will be put on the back of the loan, but then they just got this, late. They were trying to refinance, and it shows that the husband is late, who's on the credit or who's on the loan. I mean, how does that happen? And would that happen to you guys? And when you look at that, is that something that you guys could do?
So this comes up a lot. That's with forbearance, which it seems like some of the servicers during COVID were pushing this on folks when they really didn't need it. So forbearance, if I'm not mistaken, which I will follow up with you, Paul, I believe this program follows just straight Fannie Mae guidelines in terms of the forbearance policy. That is something I will double check. But if it meets the forbearance programs just per Fannie Mae, then, we could conduct the loan. In terms of housing late, if it's not within the forbearance program that was set in place, there may just be a reduction in LTV just depending on the scenario. So that was something that would be a one-off scenario that I would ask, you reach out to me and then we'll see if we can do it. So for those nuanced scenarios, reach out to myself and I would clear that up with any of you or any other broker.
Okay, cool. Now let's talk about your 3-month bank statement program. So say somebody just, it's a self-employed person, and then the last 6 months, not good, but the last 3 months, pretty good. So you can use a 3-month bank statement.
Yeah. So this is perfect for folks that maybe their business got hurt a little bit during COVID. And now, they're doing great and they're having a lot of deposits, right? 3 months bank statements, what you're essentially doing is you supply those three months, right? We generate an income, a monthly income based off of those 3 months of statements. And then we do need to prove that you're 2 years self-employed. So you do need to be 2 years self-employed still. But we'll qualify your income based on your monthly deposits that are generated. If it's personal statements, we would use 100% of those. If it's business statements, we would use 50%. And as you can see here, just with our Prime program, this would be 80% max LTV for the 3-month bank statement program and 70% for cash out. So that's what you'd be looking at for 3-month bank statement. And it's 680 and up FICO.
Okay. Well, that's good. Okay.
Yep. So it's a great option for the right borrower who, like I said, there's a lot of businesses out there that got hit pretty hard during COVID and they could supply 3 months instead of 12. We could get them in their home.
Right. And you're saying basically this once you can close this once in 15 days too? Is that across the board for you guys?
Yeah, of course. Yeah, across the board. You know, it obviously does depend on the appraisal, right? The appraisal, you know, depending on which part of the country and moving faster than others. The good news is, you know, whenever that appraisal comes back, we're going to close quickly, right? So it's a lot of it is contingent on how quickly we get that appraisal back. But, you know, barring that, you know, we're moving quick.
I know some companies like Quicken, they have their in-house, you know, AMCs or appraisal management companies. So like every time I place a loan with Quicken, right, you know, it's inside Solidify or what is it? I forgot what the name of the company right now. But then it's like their appraisals are going much faster than other companies. So how about you guys?
So we use the largest AMC in the country, which is Class, right? So any benefit that we can get for having, you know, across the board, there's a appraiser shortage just across the country that's pretty known. So, you know, what we do to fight that is we use the largest AMC that is in the country with the most appraisers, most appraisers in their network, I should say. So that's the AMC that we use, and generally they're pretty good. I have a rep over there who I specifically talk to on a daily, weekly basis that is able to move anything that may be stuck.
Okay, cool. So we talked about DSCR program, we talked about bank statement programs. What other programs do you guys have?
Yeah, very good question. So specifically, I know we covered some unique things on non-QM, but really, you know, where my bread and butter lies is, you know, we do a lot of agency business. And, you know, I mentioned on Fast for Closing, we are really well priced. I've actually brought up a couple of scenarios here. Let me pull up. So here's just a standard, you know, I know you're out in San Francisco and this is, or the Bay Area, this is a low value for
Very
you.
low.
Yes. But just on an example scenario, I'm out in Maricopa County here in Arizona. So, you know, you're looking at
anything, won't find anything 350 here. Nothing. Not even gonna go out.
Anything in California. You know, but this is something I can modify as well to get. I actually priced a high balance loan out in actually Northern California yesterday, and we were priced very well. I'd have to bring it up again, but I believe we're right in the 3 1/8 range, kicking back over 2 points as well just on this. So you'll see here just on your standard, not high balance, 5% down purchase. This is borrower paid.
Can you make it screen bigger, please?
Let's see. Nope.
Nope.
Let me see if I can blow this up a little bit. Yeah, there we go.
There you go.
Does that help?
Yeah.
Okay,
Cool.
I know it takes some of the side things out of the picture, but yeah, you'll see here, you know, you got 3 1/8 kicking back over 2 points on a 732, 5% down conventional purchase. So strong pricing, and we're, like I said, we're closing these loans quickly. So, you know, last I checked, you know, looking in Loan Sifter and looking at you know, UWM, who, you know, a lot of folks work with them. We're beating them on their elite pricing and closing just as quick. So as far as being a viable partner and closing your loan quickly with great pricing, that's what this does right here.
Okay, so that's interesting. So is this lender paid or borrower paid?
This is borrower paid, right? So, you know, I know each broker is going to have different comps, so I didn't want to bring anything to the table with wrong comps. So, and again, here's an FHA. So we do a lot of government business as well. We go down to a 600 FICO with approved eligible findings for your government business. VA as well is very strongly priced. So if you do any VA business, but you'll see here, similar scenario, 350 value, 3.5 down. This is a 660 credit. You know, 2.5 is kicking back over 2 points. And the 10-year has gone up, I think, about 5 bips within the last couple of days. So, you know, this was even better a couple of days ago just based on market.
Right.
Last thing I'll bring up, I've actually priced out a bank statement scenario as well. So you got a 24-month bank statement, 20% down, single family, 732 FICO. You are looking at, you know, this qualifies for that one rate that I mentioned, 4.125 at par pricing. But even if you wanted to buy it down with some points, you're looking at some pretty solid pricing there.
Okay. Yeah, that's similar to what I have right now. I have some guys want to buy for 1.125 or something like that. You know what I mean? And he was asking me yesterday, okay, Paul, 10% down, 20% down, 15% down, give me the pricing. So I was getting more or less like something similar to this. So I see you guys.
Yeah. So if I'm pricing anything out to, I need full scenario just so that we can get you accurate pricing.
Mm-hmm. Yeah. So what I have is one. I think. Yeah. What if the credit score is 800? Would the pricing be a little different?
Let's see here. I actually have it in my pricer plugged out. So let's see. 1 second here. If it was 800.
Right. He's putting down 20%.
Yeah, I'm here. Give me 1 second. I'm actually plugging into my pricer right now. Let's see here. 24-month bank statement. You got me working on the fly, my friend. I love it.
The GTI is. You see, I should have gone live on Facebook also and YouTube at the same time. Like,
yeah.
I should have done that. But I think I'm going to do that going forward. You like my show?
Down 800 FICO, $1 million value, standard SFR. Excuse me. Give me 1 second. I'm actually pulling it up for you right now.
Right. Okay.
Yeah. So it would adjust a little bit, right? So you're looking here.
Okay. There you go.
4% would actually kick back a rebate of a quarter. 3 and 3/4 would be at a 75 bip cost. And 3.875 comes with a quarter cost. So, that's what you'd be looking at if you have an 800 FICO.
Okay, cool. Yeah, so that's good. Yeah, you could shoot me that after the show. That'd be great. I could tell him.
Yeah, 100%. Absolutely. So, that's really all that I had planned for you. Some unique things that we're doing. Really strong partner as well for your conventional and your FHA VA business specifically. I know a lot of cash out is being used for VA. So if you do any VA out there, great pricing and process for your borrowers.
Yeah, we do VAs as well. Interesting. Okay, so you also do 1099s and stuff like that. P&L. You do those ones. Asset depletion.
So those programs are in the works, right? So we are in the process. Excuse me. We're in the process of launching our full alternative documentation line. I'm actually going to stop sharing my screen now. Let's get back to you, my friend. Yeah, we're in the process of launching our alternative doc line, which would include a P&L, asset depletion, 1099, all of that. But right now, where we're relying is bank statement and DSCR on the non-QM side, and then just being a viable business partner for your agency and your government business.
Okay, let me ask you this question. So basically, if I give you bank statements, how do you price? How do you do the income calculation?
Very good question. Yes. So we actually have an underwriting team that is dedicated towards reviewing this. So you get your bank statements from your borrower. What you would do is you'd upload those into our system, and we would have an underwriter review those within 24 hours or so to get you a generated income.
Okay, cool. So I have one for you, 3 months of bank statements, right? And purchase price, okay, or basically not even, the value of the property is about $700,000. Okay, $700,000, and then basically the loan amount is going to be $300,000. Okay, so that should be quick to do, right? To close that one in 14 days. The ratio is really good, strong. And
depending on when the appraisal comes back is just obviously that's contingent on that. But we certainly, if that comes back quick, we can close loans quickly. But 3-month bank statement program, $300,000 loan with a 700 value, you're looking really solid on the LTV there. That's a loan that we can definitely do.
Okay, cool. And then what credit score requirement, FICO score requirement do you impose on that one?
So for the 3-month, it would be 700 plus that you would need for 3 months, right?
Okay. Are there any other compensating factors there? The fact that the LTV is pretty low. So the minimum FICO you require for that is 700.
So what you would get on there is you just get better pricing, right? So your LTV is lower. There's no like other compensating factors or anything like that, but you have lower LTV and you have a good credit score doing 3-month bank statement, you're going to get better pricing. So generally speaking, right, if you're able to supply 24 months of bank statements, we have there's less risk involved with the loan because you have more history of income, right? So generally your 3-month bank statement program is going to be priced higher. However, you have lower LTV, strong credit, that's definitely going to help you out and just get you, better on the pricing side.
Right. Cool. So thank you so much, Ryan, for joining me today on my show. It was really enlightening.
Sure.